Hi, let's talk about Internet Computer with ticker symbol ICP, currently at $56, currently at market rank 21, so it's the 21st largest cryptocurrency in terms of market cap. And so we are looking at roughly $8 billion locked up in Internet Computer. Now this cryptocurrency is quite fascinating, right? It's relatively large in the grand scheme of things, but the chart itself doesn't look too impressive, right? We do have quite a bit of a negative ride over here, but we will not only look at the US dollar chart. We will also look, what we usually do, at the Bitcoin valuation. That's the chart in Bitcoin. And here we've got ICP divided by the Ethereum price. So Internet Computer valued in Ethereum. Now this channel does not focus on fundamental analysis at all. I've got a link in the video description below from Coin Bureau. It discusses Internet Computer quite well, where it comes from, where it's going, what's the background of this whole crypto. On this channel, we are only focusing on the charts. And this is what you get here. Now, how much did we actually go down? Since May 11, we went down by 85% roughly in US dollar terms. Temporarily, we were even down by around 93%. But it seems like we found some kind of a bottom, right? We could think of drawing support and resistance lines over here. And so maybe this whole downtrend that happened over here, it kind of starts to consolidate, right? Maybe we are in a more kind of stable trading range here. Another way to look at this is with a moving average. So here I've got now a 100-day moving average, and I'm increasing the duration to kind of figure out, is there maybe a moving average without a lot of failed signals that we can use to kind of distill the downtrend from this sideways movement over here. And so I'm just simply increasing the duration here. We're getting further and further away from the price. And the reason why I increase this moving average here is because these are basically wrong signals, right? If we would follow a strategy where we sell whenever the price is below the moving average and we buy whenever it is above, to basically only be in the market when the prices go up, then you don't want to have these failed signals, right? You would get into the market, but then get out again, get in again, get out again. A lot of trading fees would occur in this way, and you don't really have a moving average that really separates the negative from the positive movements. You simply have too many failed signals. And so I'm continuing to increase this duration on the moving average until we get rid of those wrong signals here. So we go further and further. And now at around 320, we've got a somewhat okay-ish moving average. We would have entered over here, stayed in the market for the most part, except this little bump. And so in this way, we've got another line that we can use as a support line. So if you consider trading ICP, I would probably set my stop loss somewhere around that line. Now I'm just simply randomly extrapolating this moving average over here. And so you could consider doing such a trade, right? It's relatively risky though. I don't do these kind of trades. I find this pretty scary. And by the way, the reason why we have such a huge downturn here is because a lot of the ICP tokens, they have been sold for cents or very low dollar amounts in the very early days to like the early investors. And those people, they have now insane returns, 50x, 100x. And so they simply just want to rebalance their portfolios probably. The reason doesn't have to necessarily be that the project is bad, but if you're that much up on your investment, you can't be all in on one project, right? So those early investors, they cashed out, and that's what probably led to most of this decline. Now, what I also like to look at is at trading volume. That's the graph over here. How quickly are coins moving from one investor to the next? And what we can see, what is relatively typical for altcoins, is that prices tend to increase when trading volume increases. So this 100% pump over here, this roughly 100% pump, it coincided with more trading volume, and that basically means there was more excitement around ICP. People bought into it. Maybe there was some news coming up, and so interest shot up, price shot up, trading volume went up. But once this interest fades, the news are not relevant anymore, then volume goes down and the price declines as well. And so we can also see the recent pump, we had the same story, trading volume increase, price increase. So getting into this is in general obviously a very dangerous game to play. You're doing a contrarian investment over here. But one thing I would always look at is, are you buying in times of low trading volume or very high trading volume? And I would definitely be very cautious to buy during high trading volume unless you are in the pump very early. When we have a very low trading volume and then we quickly shoot up, but you're still relatively low on the price, then by all means go ahead. But if you've already risen by like 50, 60, 100% and the trading volume is high, that's pretty dangerous. And so if we now zoom into the recent price action, we don't see any pump. We do see slightly increased trading volume. So this might still be relatively dangerous. There are two interesting ways to try to trade those trading ranges. If you're saying we're hovering around these support and resistance lines, what you can also do is you can look at the Bollinger Bands. So this is now the daily chart. And what the Bollinger Bands do is they measure the volatility of price movements and sets them in relation to an average price. So let's get rid of those support lines. What you can see is that the Bollinger Bands, they're either very wide or they're very narrow. And that's because the preceding price movements before, they have either been fluctuating a lot or just a little. And when they've fluctuated only a little, then the bands here are narrow. The way this is calculated is the orange line over here, the middle line, is a moving average. So in this case, the 20-day moving average. You can actually adjust this to your liking. Now you've got a longer moving average, but in general, I would normally stick with the standard settings. So this here in the middle is just a moving average. Now the blue lines over here are values that are added and deducted from that moving average. So when we look again at the parameters of this indicator, we see that 2 standard deviations from this moving average are added and subtracted. And the idea is the following. The basic idea is that price movements, they are somewhat random and they somewhat follow a bell curve like this. So what this means is here on the y-axis, we've got a certain return on a day. Okay, so let's say this is our daily return. And here on the x-axis, we've got the number of days that we observe. And so we've got some kind of normal return that we can expect. And then on some days, things are incredibly positive. And on other days, things are incredibly negative. And most of the time, not much is happening, right? This is kind of like the idea of a normally distributed random return model. And so the distance from this median value, from this normal return, you measure this in sigma. So you say here's 1 sigma, here's 2 sigma, and you do the same on the negatives. And what you can say is when you deduct 2 sigmas over here, and you add 2 sigmas over here, and you measure how much is this area here compared to those red areas, you can say that 95% of all returns fall within this green area. So only in 2.5% of all cases, we get an outlier to the positive, and in another 2.5% an outlier in the negative. That is 2 sigma away from the mean. And so back to the Bollinger Bands again, we've got our mean, right? This is a 20-day moving average. And then we subtract 2 standard deviations. We add 2 standard deviations. And the idea now is that only 5% of all of the prices that we can observe are outside of these Bollinger Bands. And so you would say, okay, when we are outside of the Bollinger Bands, this is something that rarely happens, and so we are probably overbought, and when we are below, we are probably oversold. Now, what I like to do in general is when using those overbought, oversold indicators, I tend to use shorter time frames. And that's because prices, they tend to fluctuate more on a shorter time frame. If you go and look at charts over several months and several years, you can observe a lot of trends, right? So this is now the Bitcoin chart, very long term, several years. And the prices, they tend to move in trends. We've got our hype phases, we've got our depressions, but there's always some kind of clear movement here, right? The random noise around the trends are relatively small. Now, if we zoom in a lot on a price like this, right? If we now just look at, say, a day, then suddenly the trends, they are much less clear, right? We get much more fluctuation around the prices. So the trends are a smaller component compared to the random volatility that happens within a day. And so since these overbought and oversold situations, they happen much more on a shorter time frame, that's why I prefer to use an indicator such as the Bollinger Bands also just on a shorter time frame to basically give these extreme outliers some kind of visibility. Now, another approach that you can use that I personally prefer is the RSI. That's this indicator over here. Again, we are looking at the hourly chart of Internet Computer. And usually the hourly ticks, they tend to work relatively well for timing the market, both for exit and for entry points. And if you want to get really nice signals, I would actually move those to 80 and 20. I've also done a back test on Ethereum for exactly those kind of signals. And we can see when we look at, for example, these selling signals, that we do tend to get relatively good times to sell, right? For buying, we didn't get any signal over here. Go a bit further in the past, we did get a buying signal over here. That's not too bad. And then obviously when we are in a downtrend, you might buy the bottom, but if it just continues to fall afterwards, it's not that helpful, right? Now let's also switch to the Bitcoin chart or to the Ethereum chart. They're actually not that different, right? There's almost no real reason to look at those charts. Versus Ethereum, we have lost 80%. Usually what I do with altcoins in general is to look at the Ethereum chart, because in the end, your active capital is mainly in Ethereum probably. You might buy and hold Bitcoin for the long term, but with Ethereum, you trade in and out. Maybe you swap on a decentralized exchange. And so when you go riskier in your investment, you go out of the quote-unquote safe Ethereum into a smaller cap altcoin, you want to get compensated for this additional risk, right? And that's why usually I look at the Ethereum chart. But since these movements here in ICP are that significant, it almost doesn't make any difference at what kind of chart you look. We have the strong sell-off and our consolidation. Now, one could argue that maybe this is a chance to short ICP, to bet on falling prices. Maybe. I personally am not really a fan of shorting, simply because once short interest is too high on a coin, and that's often what happens when short trades seem to be obviously good, then there's a lot of short interest, and then the exchanges, they tend to manipulate the price short term. Now that's it for the charts. As said before, I will put a link for the fundamentals in the video description below. They are not that pretty either, but I leave this up to Coin Bureau to tell you. He did a really nice fundamental research on ICP. If you're interested in buying or holding it for the long term, at least watch this video before. And in case you enjoyed this video, feel free to subscribe as well. I publish videos at least every other day. Feel free to also join our Telegram channel. We are currently approximately 250 people. It's completely spam free. Would be great to see you as part of our community. See you next time. Bye bye.